So what does this so-called big step mean for people living day-to-day in South Korea? We have Professor Oh Joon-seok, the Dean of Sookmyung Business School, to give us the deeper look. Good morning, Professor.
Morning.
Well, for months we have seen the rates go up, and we know the reason behind it by now. But South Korea is known to have one of the highest household debt levels in the world. What does this big step mean for families with debt as well as their interest payments?
I might say in three respects. For the first, high debt level of household has come from the lower interest rate than expected in the financial market, which might result in overlending and overconsumption. Inflated liquidity in Korea are prone to flow through to the housing market in Korea, which implies there has been rapid increase of the real estate prices. What I mean is that when there happens a high debt level crisis, there is a string with the real estate bubble plops. And secondly, it might be very vulnerable to interest rate hike because of higher burden to pay at the cost of overlending and the cost of overconsumption. Let's imagine a balloon. When it is inflated, as it becomes bigger and bigger, it becomes more fragile to touches and pressures. And lastly, what is urgently needed is, in this sense, to deflate the pressure. As a result, it will lower consumption and investment from the government policy, which will be a danger and threat to the borrower household. Because bank will try to redeem or take their money back as soon as possible. No extension might be allowed for the time being, and therefore I could say that the fast interest hike could dampen consumption and corporate investment to slow the Korean economy.
Right, and it's worrisome, certainly. And a lot of companies in Korea depend on trade, right? And we see that countries' trade deficit continue to widen. How is this going to affect that aspect?
Recent trade deficit, it is extraordinary, comes from the inflation in tandem. Cost-push inflation from the external factors, such as a Russian-Ukraine crisis and the supply chain disruption. On the other hand, demand for inflation comes altogether from the internal factors, overall price increase in the market, which mainly comes from the overinflated money supply in the domestic market. In a way to avoid continuing inflationary pressure, interest hike would be inevitable, I might say, which might end up in increasing burden to the debt holders. Korean economy faces multiple whammies aside from the financial volatility from tightening tantrum, shipping crisis, global recession, and more than that, economic slowdown in China. China is the largest trade partner of Korea. In this sense, the government must closely monitor and supervise risk factors. It must contain inflation pressure more than anything else, and then stabilize the livelihood for the people. In this end, trade deficit might be expected to continue for the time being, and then private sector innovation, investment, and then private sector growth will be the key to get out of this kind of trade deficit trap.
Right. And now let's talk about the stock market. South Korea's benchmark index, the KOSPI, has been falling sharply recently. Will this rate hike further accelerate the fall of the domestic stock market?
Yes, it will. When the interest rate stays lower, from the investment point of view, there is not much chance to operate their money in the other than the stock market. So when the time of a lower interest rate, most of global capital flow into the stock market. But on the contrary, when the interest rate goes up, there are many chances. The investor has an edges, and they could diversify their portfolio other than the stock market into the real estate and then gold, foreign currency, and other financial instruments. In addition, when the foreign exchange rate goes up, as a step of portfolio risk management, large sum of money it goes into dollar currency denominated bonds such as a treasury bill, treasury note, and treasury bond. making an exit from the existing stock market. Even though the cheaper one could help export eventually by making Korean products price competitive on the U.S. market, but I might say that given the Korea's economic fundamental, foreign exchange levels and growth level, even though it might be premature to raise concern about the flight of capital from the Korean market, but what is certain is it will take time to recover the former level of KOSPI when there is time of a lower interest rate.
Right, and we see the economic situation really affecting the everyday individuals here in South Korea at the moment now. Well, thank you so much for joining this morning, and hope you have a great day, Professor.
Thank you for having me.